There's no doubt that the climate for tax planning has changed hugely since the financial crash. It used to be the case that if the law said you could do something, then you could do it, and no problem doing it. The distinction that we all had to follow was between avoidance and evasion. The difference between those things being either the thickness of a prison wall or me keeping or losing my practicing certificate. Simon, what do you think is going to happen in the election, and what are the results of all that going to be?
The results. Well, I think it's quite interesting to make a comparison about specifically the main parties and what they have announced. You know, we're aware of Labour's move to, in effect, abolish the ridiculous system as they see it, and they've quoted on their website, and these loopholes that they see as being abused. You couple that with an intended return to the 50% higher rate, a mansion tax coming in for properties over £2 million, and it seems to be an assault on the wealthy and your high net worth individuals in the UK. The Conservatives have been quite quiet in terms of what they actually said, but they have said there will, in effect, you won't be inheriting a non-domiciled status. They've made a small statement to that effect. That would mean your second and third generation families that might be in the UK might suffer under a Conservative government. But there is always this move to, in effect, attack the wealthy individual because it's seen as an easy target, this demonising of the non-dom. From a corporation tax rate perspective, you have Labour announcing they want the lowest rate in the G7. The lowest rate currently in the G7 is Canada with a 26% tax rate. So that means there's scope actually to increase the corporation tax rate under Labour. The Conservative Party have come out and announced they want the lowest rate in the G20. The lowest rate in the G20 is currently Russia, again with a 20% tax rate. So that would suggest that under the Conservative Party, you might have a lower corporation tax rate, which again generates growth for the likes of the investors that are actually coming to the UK.
Ed, you make a handsome living out of avoiding, helping non-doms avoid tax. What are your personal views and your professional views on the way in which domicile has been, the concept's grown, and how it's used in tax?
I'm in a room of friends here, right, so I can say what I want. Here, I will say this. The domicile basis of taxation should be changed, for sure, which I accept makes me a fairly unpopular person. I'm happy to put myself up and say this, but it should not be abolished. One thing that's been very clear in the last few weeks when we've seen the debates on the concept of non-domiciliary status is that no one seems to understand what it actually is. It was rather embarrassing to read some of the manifesto documents and the briefings which referred to certain individuals who had made their home here and intends to live in the UK forever, and said how unfair it is they should be treated differently from others. Well, those people, as a matter of law, are domiciled in the UK. The problem with domicile is it's a test which is partly based on intention. So the way you're taxed in the UK depends on literally what is in your mind, which of course no one else can know. I think that's a silly basis of taxation. You can't tax based on intent. So I think whatever happens in the coming weeks and months, I think even though there is a very strong case which we'll be making very powerfully for retaining a favourable basis of taxation for some people, it's very likely that the test itself of domicile will switch to a different test.
If I may just put it, why would one want to invest in any country? And I think there's a bunch of things that people look at when you look at competition as a competitive environment that's there or what it offers. And there are certain business reasons that people make investment. There are compelling reasons that bring income to an investor. And tax is a dependent of the two first aspect in terms of what income you can generate. And as long as you don't over-engineer a law to say that you have to not rock the boat to an extent that you don't survive, I think people will still want to invest.
I think it's an important concept. It's developed over time through law. People understand the concepts. I think what is being proposed with actually removing that status is one step too far.
People don't mind paying tax on investments they make. To the extent people get profit, to make profits in a country, they expect to pay some tax there. The recent extension of capital gains tax in the UK to sales of UK residential property came as not a bit of a shock to any of our clients. They were shocked at their previous position before April this year was that non-residents could sell property in the UK without paying tax.
If I speak from the high net worth individuals in India, they probably come to the UK for precisely 4 reasons that I can think of, which is the continuing themes of investments. One is real estate in the UK market. The second is the financial market access that is there also in the UK. Third, to access this market in this part of the world, again, UK is very relevant as a country. And also there is a trend of offshoring your holding of investment or your wealth, and UK is probably a very important part of this whole strategy for Indian high net worth individuals.
The taxation of trust in itself is a horrible topic, and this is just one aspect of it, which is incongruous in a whole mountain of incongruity. I would be very up for having a complete rehaul of the UK inheritance tax code for one. Actually, we talk about domicile and we say that non-doms have it good and have a very easy time. Actually, the rules are horrible. Working out whether someone's remitted funds to the UK is really tricky. If someone's had a trust distribution before they came to the UK, they can become subject to tax years later based on events that are totally outside their control. So all of this debate needs to be seen in the round, I think. It's not just a case about should we make life worse for non-doms. We should say what should be rational and fair across the board.
As UK competes with other jurisdictions like Singapore or Dubai or New York for that matter, UK has certain things that they offer in terms of the economic opportunity, which is far larger. Having said that, everyone wants to look at how they are able to manage their affairs in a manner that they are able to have some sense of equity over here. I think that's the fundamental focus everyone would probably want to look at as they invest in India. And I think that doesn't change as we invest in the UK, for that matter.
I think I'm going to call that the Rahul Dravid approach to tax planning.
Well, I think
The wall.
the message of don't panic is very important, isn't it? I think this message went out. What gives me great comfort is I think, and I speak in a very apolitical way, that Labour assumed this would be a complete no-brainer. It would just be something that everyone would agree with. Because non-dom, no one really gets what non-dom means. They think it means rich person, we don't like them, possibly a banker. And they assume this would just be a political no-brainer, that it would be just an easy sell. And actually people seem to react to it differently. They said, what is this? What does this mean? What are these people? Yes, there may be anomalies, but what does this mean in terms of tax collection? And that gave me a great deal of comfort. I thought this would be just utterly hostile, and I don't think it's turning out that way at all.
There is the tax avoidance, tax evasion, and then there's a third thing that's come into play, which is about the public sentiment, which is then driving, obviously, politicians and their decision. I just wondered whether that's something that the panel think is going to continue and that will have an influence in things such as the non-domicile status.
My personal view is that, yes, it will continue. It's out there. And it's very difficult to put the genie back in the bottle. When people are seen to be hiring expensive professional advice to pay less tax than you in the same circumstances. I mean, there's examples of hedge fund dealers who were paying a lower rate of tax than their cleaning ladies.